Hello friends, this is Rajat Dhar, Managing Partner at Finogent Advisory, and I hereby welcome to the IPO review of Happiest Mind Technologies. And friends, this IPO will actually get on the block for the launch on 7th of September, and it will go till 9th of September. So there will be a 48 hours window for it to happen. So while it happens, and there has been like a frenzy for going for an IPOs and selecting it, whether this fits in the call or not, and what is the unique name, Happiest Mind Technologies, and we have never heard about it. So as far as the mind comes into them in our remembrance is about the mind tree in terms of the IT space, but Happiest Mind Technologies doesn't ring a bell. So friends, in this video, I will like to tell you whether you should subscribe for this IPO or not and what it is. But before I provide you the number crunching statistics, which otherwise I would request you to go online and fend for yourself, because my job here is to actually tell you whether it is worth it or not. So starting from the first point where we can go forward is that what is the legacy? What is the legacy of the Happiest Mind Technologies? What is the genesis, from where it has come? So friends, let me tell you, the promoter of Happiest Mind Technologies is Mr. Ashok Soota, and Ashok Soota is the man who has led Wipro from 1984 to 1999 and has been the one who is responsible for making Wipro IT Solutions what it actually stands for, making it among the top players in the Indian IT space. And the man credited is Ashok Soota. So he is the man who is actually the promoter for Happiest Mind Technologies also. Now that is only the one part of the story, friends, and the second part of the story is he's also one of the co-founders for Mindtree Technologies, and we know that in the Indian IT space there are a couple of big bellwethers: Infosys, TCS, HCL, and then there's a Mindtree, Cognizant, so on and so forth. So friends, Ashok Soota is the same man who had been one of the promoters of and founders of Mindtree, and that in 2007 had gone for an IPO and was listed by around 103 times oversubscription was there when Mindtree got listed. So friends, this is from the same house, the man, it is from the same man the IPO is coming. So this is one of the first thing. The second thing which will actually get glued you to this IPO analysis is the fact that even Infosys, the space, even in IT and ITES, the space in which Happiest Mind Technologies function, they get their 96-97% of the revenues, but the companies like Infosys, Cognizant, and Mindtree don't have their average revenue even going more than 40 to 50%. So that means a company which is unlisted, is in the mid-tier space, has only 24 of the biggest clients, is having 90% of the revenue coming from the domain within information technology, which even Infosys, Cognizant, and the companies like Mindtree are not having. So now, if you still think, yes, there is something to be earned out of it, to make money out of it, I would request you to please stay with me for the entire duration of this review, because this is where you might be able to make money. But while I do that, there's a statutory compliance and the statutory disclosures I want to make is it is not recommendations. My job here is to review and put forth the statistics with you. Whatever the decision you have to take, you have to consult with your financial advisor, broker, agent, so on and so forth, so that you are able to take positions in it or avoid it. So friends, so while we're talking about it, Happiest Mind Technologies. So Happiest Mind Technologies is actually an IT company, and like I told, Ashok Soota is one of the promoters here. Now let me tell you, so what is the issue size? Actually, they are going to raise around 702 crore, out of which 110 crore is the fresh capital. So what does that mean? It simply means that only 110 crore will be used by the company for its growth. So where does this 110 crore will go? It will actually go into work in progress operations, and it will also go into some other general corporate expenses, and the usage is 1 year, so they will be consuming it over next 12 months, 12 to 15 months. That is how it is. So while we're talking about, they are talking about the price band of 165 rupees to around 166 rupees, and there are 4.2 crore shares that are into the market, and even if you bid for it, the minimum lot size is of 90 shares, and then in multiples of 90 shares you can apply for it. But as we go for it, the investor, if he is a knowledge one and does know about the IPOs and does know about the company, I think that the people who will apply for an IPO will not miss this, just because of the fact that it is coming from that legacy, with the financials support from that matter. So while we say that, so where does the remaining 543 or around 600 odd crores go? Though that money is actually being taken out by JP Morgan, who has been the investor and is seeking an exit out of it. And some of the shares have 6.5% to around 6 to 7% of the these have been offloaded by the promoter Suta himself, which is being raised as the fresh capital. So I will come over the valuations of the stocks and the pricing and the profit at the later point in time, but let us talk about the digital IT space in itself. Friends, let me tell you how IT space functions, and it is a totally changed dynamics now. Many of the older companies, many of the companies had actually been working on the two types of IT systems. One is called as a legacy IT system and one is called as the digital IT system. As far as the legacy IT system goes, legacy IT system means you need to have a server, you need to have the hardware, you need to have a software, and then you need to build the infrastructure and then proceed out of it. But here in this case, when we talk about the Happiest Mind technologies, they are predominantly into the digital IT space, running onto the cloud, getting the applications made, getting the product development made, or getting the infrastructure made. So technically they are into 4 product domains. So friends, while I'm talking about this, I would like you to please click the like button and share it so that your friends in your timelines are also able to see that. If you really see that in the last 6 minutes and 42 seconds had been that time of great knowledge and information provided to you, please share as much as possible. So there are the 4 product lines. One is called as the digital businesses, product engineering, infrastructure management, and the security services. While we are talking about this is only one aspect of it, but as I proceed and analyze the whole sector as it is, you will know that okay, it is really great coming on there. So first thing, they're into the digital business. So every business, we know that COVID pandemic, there has been the companies which are automating their systems and processes, from a simple like companies like Zerodha, if you talk about the fintech, they are the mutual funds and the stockbroking companies who are technically going totally 100% digital with no paper and nothing, and whether it is a client verifications, KYC verifications, or everything that is being done digital. So similarly, the digital business process had been there. Product engineering has been there, where they are devising the products and there is an end-to-end customer solution. So when they get into the business, they get into the business for the entire spectrum or the life chain of it. So product infrastructure being developed, and then security services when we're talking about the cyber security. But while we are talking about this, they are into the digital IT space, not into the legacy system. And with that, the way the technologies have been changing, they are very aggressive in terms of the latest and the brandest of the technology that they are working on. You talk about the machine learning, you talk about the artificial intelligence, you talk about other domains with regard to it, they are actually into it and working very hard to it. And while they are talking about it, like in infrastructure management and security services, there comes the monitoring. There's a monitoring coming into it, there's the management capabilities coming into it, there is specialized in automation and business IT and DevSecOps that they have to do. Not only this, if we within segments, if we see artificial intelligence or we talk about the machine learning, they themselves are growing at a compounded annual growth rate of around 24%. So while they are growing at a compounded rate of 24%, the companies in the same domain are obviously going to benefit if they are playing their game right. But while we're talking about, let me come on to the valuation part. Over the 3 financials year, in one of the financial year, it had actually made loss in 17-18, but then in next 2 subsequent years, it made a decent profit and had been a sustainable in that. As on 2019 and 20, they also have cash balances with them. So let me tell you a couple of parameters here. When we talk about the valuation of the company, whether the stock is pricey, say they have listed the stock at 165 rupees and 166 rupees. Now you want to apply for it. Now, whether I'm paying more money to the company or less money to the company, that is determined by the PE ratio. PE is price per earnings. How much price you are going to pay for 1 rupee of the earnings. So here in this case, they have put a PE ratio of around 31 rupees or 26 rupees. That depends upon the valuations of the analysts that are doing. So I will say that minimum, at a minimum level, we can see the PE ratio of around 26 and above. and at the upper level it is around 31 rupees. So it is quite steep pricing. It is quite steep pricing, but I believe they can vouch for it because they have literally no competition or very little competition in the tech space, so therefore they can play around with it. But the way the momentum is going and the way that IT companies are going with the digital boom, COVID pandemic, and the changing dynamics in the IT industry, we see that it is okay. 30, even 31 PE is okay to proceed further. So no issues, with that. However, one concern we need to be quite sure of, and that would actually be dependent on their corporate social responsibility or the way the management thinks or believes. Normally, whenever we invest into the company, there are two type of companies. One type of company is ki, okay, there is a promoter, and promoter is the majority stock shareholder. Majority means the promoter has 75% of the share or 80% of the shareholdings, and the rest is with maybe the corporates or the general public or institutions. So there we can understand that, okay, promoter has an innate desire. The promoter has an innate desire because I'm a 65% or 70% owner. I will work for the company and I will make the company bigger. So he will genuinely work for it. But otherwise, on the other end of the spectrum, if we see that there is a company in which the promoter stake is less than 50%, and then there are institutions, and then there are corporates, there are other investors, then they are looking at their ROI. They have their own benefits, they have their own ROI. So therefore, when they have their own ROI things working on it, there might be a risk that how much so then their game is actually quarter on quarter. So they will be working on the quarterly results, they will be working on the annual results, they will not be working on the things which are 3 years down the line or the 5 years or the 10 years down the line, which otherwise the promoter is going to take. That is a matter of fact. When I say this, what statistics I am going to say is the promoter holding before this dilution of his stake by Mr. Suta, the promoter holding is around 62%. But after that, it is around 53%. So 53 is just a borderline. So Mr. Suta or the promoters holdings will reduce to 53. CMDB, which is another and the venture capitalist fund, will be around 20%, then the public will be around the 20%. So we will have to see how things pan out, and it will be based on the how the management board or how the promoters have their ethics and values in place to make sure that the shareholder equity is taken care of. So when we talk about when we talk about the revenue this company is actually making. So what business they are into, which type of industry they are into, what clients they are into. So this section will cover about this. Out of the different segments like retail, travel, manufacturing and others, there is an edutech, education technologies, there is a high tech, latest technologies, BFSI. Within these three segments, high tech, education technologies and banking and financial services, they have around 60% of their revenues coming. So they are very less exposed to retail and other travel and media. Travel and media is around 17% and retail is around 7.5%. So technically that is the reason why Mr. Suta told that around 70% of our business is unimpacted by the COVID pandemic. So that also plays a good factor in its own benefit. So therefore, from the revenues point of view, we know that the 60 rupees coming in their kitty out of the 100 rupees is actually assured. There is no risk as far as the COVID pandemic or any such things goes. And these are the things. So information of things, IoTs, analytics, security solutions, SaaS, digital cloud. That is the way they are actually going or working into. Now the crucial element is when we're talking about their domain expertise or their geographical presence, their major chunk of clients are actually based out of US. And actually, friends, this is the reason we can also see as a risk element. So now I will be covering the risks that are quite eminent in it, and also are there any ways to mitigate it or how we foresee for the next 6 months or a year. Geographically, if we see that 77.5% of their clients are actually from United States. And from India, if we say, it is only around 11.9%, that is around 12%. UK is 7.3. So if we leave everything aside, in India, there is a 12% of the clients which are based out of India, and the remaining 77.5 are actually based on the US. Now, we also know that the elections are coming and we don't know which way the wind will blow. But if the US takes any of such stance against it, so or companies which are actually foreign working in US, or are there any change in regulations, then this might be a risk. So this is the one of the factors. But while we are talking about this, there are other key parameters that every IT company has to take care of. So what are those parameters? Those parameters are, what is the revenue mix if we talk about the on-site and off-site? So how much money comes from the on-site and how much money comes from the off-site? So from the on-site is 22.5 and the offshore it is 77.5. But if we see about the bill rates in US dollars, it's around 90.4. So these factors have to be taken care of. If the money that is coming from the US, how much money in terms of the revenue comes out of the US, while the number of clients out of US is more than India, but what is the billing that comes out of it? And if we see that, and if we work on those numbers, then it is simply a risk in current times. If the country decides any policy against foreign companies working there, it might put a spanner. So another risk that we are actually taking is it has around 24 top clients, and those 24 top clients constitute around among those 24 top clients and others, around 60% comes from the top 10% of the clients. So 60% of the revenue comes from the top 10% of the clients, and even the one top client singly constitute 12% of the top line. So that means if that one client loses, or it leaves this Happiest Mind Technologies, there's straight a dent of around 10% in their 10 to 12% in their books. It constitutes around 12% of their total revenue. Another disappointing factor that we can see here is that they don't have any long-term binding contracts with their clients. And this again brings me back to the first question, that if US has some detrimental policies towards our companies, then the clients can anytime come out of it without any penalties. And if they are coming out of it without any penalties, then this is actually not having that, you can say, moat. There's no moat. There's no, I won't say moat, but there is no exit load. So there is no exit barrier, if in the marketing parlance, if I say that. However, till now they are playing their game well. So however they are playing their game well, and they are the market leaders in a certain category of the mid-sized companies, and even their billing rates in those digital IT services are far ahead, even double than that of Infosys, Cognizant, or and the Mindtree. So from the view of entering into, whether you wish to enter into or not, or whether you should enter into or not, what our personal take is, you can take a view of a year, 2 year, or 3 year, but with that notion you should enter into, because dynamics might change in next 6 to 8 months as companies start working on new technologies, and companies are also relooking into the segments, sectors into it. Because here in this case, in Happiest Mind Technologies, what benefit they are having, they have multiple SBUs, specific business units, so that enables them to cross-sell across the business units. And they also provide end-to-end solution. They also provide the vertical integration, and that is the reason why they are having cross-selling and upselling. So their main strength is their existing customer base, so their returning customers are more. And this is quite because of the fact that their DNA is born digital, born agile. Whatever they do, they have, eat like Tendulkar, eats cricket, sleep cricket, drink cricket. Similarly, born digital, born agile. So they have to be agile. They will keep nimble-footed, and they will be digital in all their approach. So that means they will be very less over the legacy IT, but rather more towards the digital IT, the domain of artificial intelligence, machine learning, Internet of Things, and the likes. So friends, so this is the crux or the gist that I am putting in front. If you ask me, I personally would want to go for it because it is one of the good numbers. But irony is that what I am looking at, I might see it getting oversubscribed, and if it goes oversubscribed, I know that I will be landing up with only 10 or 15,000 of the shares. But for the affluent and HNI investors, there is always a way to go for a pre-IPO route, getting the stocks before they are even listed. So if you want to go for that, please do write to us, connect with us on the social media, and we will be able to help you how to have the shares before they are even listed. So Friends, thank you so much for listening to me. It is already about 8:51 right now, and have a great weekend ahead. It's Saturday, so enjoy your Sunday. Stay tuned. If you have any queries about anything, please do put your comments in the comment section, and we'll be more than happy to assist you with that. And any IPO assistance you require, let me know. My team will get back to you and assist you in the same. Thank you so much. Keep liking, keep sharing, and I will again come back to you with the next IPO that is all again on the rocks. Thank you so much.